Good afternoon, Jimmy. How are
Hey,
you
good
today?
afternoon, Emin. Yeah, I'm good. Thank you very much. Christmas mood.
Investing Bro Market Talk episode 14. Okay, so welcome everybody. So for those who are joining us for the first time, we are here to talk about some of the latest happening. And for those who have been following us, thank you so much. Okay, today we want to talk about another REIT. So suddenly we have two new REITs listed. So last week we actually talked about one, Daiwa House Logistic Trust, and today another one, Digital Core REIT. So data center REIT, Jimmy, is something of your interest?
Yes, always.
Okay, so for those who have I'm not sure what is happening, let me just give you some background before we share our insight, share our analysis. Let me share my screen. Okay, so this is a pure play data center digital core REIT. As you can see, of course, I actually scraped this off from the Business Times, and they're actually going to start trading on Monday, which is tomorrow. If you have tried to apply for the IPO and got it, you are really lucky. 16.1 times subscribed. So for every one share, there's 16.1 what do you call that, people going for it. Okay, so of course a lot of people didn't get it. I didn't get it. I think Jimmy didn't get it. So the question here is this: if let's say Monday when the market open, does it still make sense to buy? Okay, so this is what we're actually going to discuss in detail today. So before I just get Jimmy's comment, I just want to give you all some more information. What I did here is this: I have actually listed down some of the REITs with data center. Okay. And of course, for Capital DC, it's a pure data center REIT. So they're actually giving it about 4.1% right now. And we have the other two REITs, as you can see here, there's a mix. Like, for example, they have a mixture of industrial buildings, and of course data center, and data center may not be the main one. So this is the kind of dividend that they are giving right now. Maple Tree Industrial Trust 5%, Ascendant Suite 5.2%. And of course, let me just run through very quickly some background information about this REIT, so that you can actually expedite your decision-making process. So Digital Core REIT, again, for those who actually just want to have a very quick overview of a new REIT, all you have to do is just to read the first few pages of their prospectus. As you can see here, first time, very important, pure play data center S-REIT sponsored by largest global owner, operators, developer, and acquirers of data centers. Okay, so this is of course a plus point. Down here, IPO price was $88. Okay, and convert to Sing dollar is $1.21. Okay, the forecasted dividend yield is 4.75%. So as you can see just now, if we compare with the rest, so it's better than Capital DC, but compared to those mixed REITs, of course, is not as good. Okay, let me just move on. These are some of the background information. They have 10 properties, total value of 1.4 billion, 6.2 years WALI, weighted average lease expiry, which is actually quite good, considered quite long, relatively speaking, and is 100% occupied. Okay, so the other good thing about this portfolio is that it's freehold. It's all US property, so it's actually freehold. Okay, so that's definitely a plus point for me. If you're interested, you can dive in further. So these are where all the properties are located: Silicon Valley, Los Angeles, Toronto, and Northern Virginia, as you can see here. And the other thing that I would actually pay attention to is the gearing ratio. At 27% is actually very healthy, which means to say they still have rooms for growth. They still can afford to borrow money to actually keep growing. Also, these are all the background information I can actually get from the first few pages of the prospectus. Now, Jimmy, it's time for you to talk. So question number one, tell us, how do you feel about this REIT?
Okay, first of all, you have to look at the sponsor itself. The sponsor itself is Digital Realty. It is actually based in US. It is one of the largest data center REITs in the US itself. So the one that listed in Singapore, you want to look at it, it is basically a REIT sponsored a REIT. So that is something that you all want to be, investors have to be aware that the structure although it's still the same sponsor, but it is a REIT sponsoring a REIT sub. So that's number one thing you need to take into considerations. The second part of it is that the business itself is actually growing very well. If you look at the parents company, which is the DLR, Digital Realty, the dividend yield for the main company is about the DPU yield is about 2.74%, which is significantly lower than the one that is listed in Singapore. But the business itself is actually growing very healthily, in terms of three main sectors: social media, co-locations, and then the other one is what we call the hyperscale cloud, which is basically growing in the region of between 23% to about 25%. So it's growing very well. But on the other hand, the profit margin of this Digital Realty, the parents company, is we're looking at a net profit of about 15% only. So it's not really a very high margin business in the US itself, nothing compared to KDC, MIT, or Essential. So that's something that you need to take aware of. Now, the other part of it is that for the property that's actually listed here in Singapore, the four locations that Eamon had just mentioned, the NAV value is actually less than 4%. So given the fact that he has a low gearing ratios, we are expecting that this, the one that listed in Singapore, the Digital Realty REITs, is going to have more acquisitions along the way. Down the road. It's not just going to be, it is what it is. So that's something that perhaps investors will need to aware as well. They are going to do a new capital structures, in order to acquire more property, along those ways. That's my personal opinion, going forward. In terms of whether we want to invest in this or not, so as a risk investor, I think I don't have to say, we are all focused on only one thing, which is the DPU yield. And Eamon have just actually shown, the comparison between KDC, MIT, Essentials. So this Digital Reality sort of like sit in between MIT and Essentials. It's actually sit between there. So I am not saying that it is going to be bad, but perhaps, if you're happy with 4.75, this is probably a good REIT to go in. Personally, I would say that if today I have this money, to invest, if Ascendus is already giving 5.2, why would I want to bother about Digital Core, right? Because after all, they are, the NAV is already below 4%. So that's not really an attractive propositions in terms of just looking at the financial returns, But of course, if you are saying that, well, the business is going to grow because of the US presence and continue to grow, then of course, a 4.75% would be still a relatively good take. If tomorrow, when the market's open, if you're able to buy 88 cents, that is considered as one of the, I would say, a fair buy. I wouldn't say undervalue or overvalue, but it's just a fair buy. So that's my personal take on this. Thank you.
Okay, so Jimmy, I just want to hang on there for your last point. So I'm actually quite sure that I wouldn't say I'm quite sure. I got this feeling that but tomorrow when the market open, the price will actually go up, given the number of times actually being oversubscribed. So what is the lowest yield will you be able to accept, or at what price that you still think is actually fair? Do you have a number to that?
I would say in the region of about 4.3 to 4.5 is still acceptable, but anything lower is really not worth, in my opinion, that's really not worth the effort, because I personally is saying that these REITs will have to grow in order to, to make this present, in order to reward these investors. So that when that acquisitions come, then who knows, that they may raise money from the investors again. So I for me, if there is immediate needs, do you want to be a sure thing? MIT and Ascendus will be a sure thing. Digital Core is basically to look at the growth potential. That's how I would look at it differently. Yeah.
Okay, for once, okay, we'll say for once. So this time round, I am actually in line with you. So personally, I got a feeling that the price will go up. But if let's say I still can get a yield above 4.5%, I'll probably still be very happy to go in. And I totally agree with the point of MIT and Ascendus. So these are very long-term REITs, solid blue chip REITs. If they are giving like above 5%, it actually does make sense if the funds are limited. But of course, totally agree, if you're looking for some growth, I think Digital Core REITs do have some upside over the long term. Great. Thank you.
It has to prove its worthiness for the share price to go up, you know what I'm saying? So right now, as it is made available to the investors, it is what it is, you know, it's nothing exciting, you know. So that's where I'm coming from. Yeah.
Okay, thank you so much for insight. So hopefully what we have provided give you some more guidance to whether you should actually buy them on tomorrow if let's say you didn't actually get it. Of course, for those who actually subscribed and got it, congratulations. I think you actually got something at quite a good price. Okay, so with that, that's all we have for today's session. So if you like what we do, same ritual, click on subscribe, like, share, so that we are motivated to do more of such videos. See you next week.
See you.
Bye-bye.
Bye-bye.